Good evening, everybody. Uneducated Economist here. So it's happened again. The 2-year and the 10-year have inverted yet again. The 2-year is now yielding more than the 10-year Treasury is, but that's not the only thing. The 30-year bond coming out of the U.S. Treasuries is also yielding under 2%, which has the 3-month Treasury now yielding more than the whole rest of the yield curve. That's right. The 3-month Treasury now has a higher yield than any other position inside of the yield curve. This is it, guys. This is stuff going down right now. The indicators are starting to take place that a recession is definitely looming in the future. Now, I don't care how many times people say it's different this time. It very well could be. But this is the indicators. This is what you're looking for to see if there's a recession looming. Now, one of the other things I started looking at was that if you go to like CNBC and you just go over to the markets and then the bond, or go to the tabs and look at the bonds, and you see all the different countries up there. Look at the yield curve on a lot of these countries. A lot of them have gone negative. And places like Germany, who have a negative yield curve, not only do they have negative interest rates, they got negative inverted interest rates. Okay? Go check it out. Now, what really surprised me is go look at Italy. Italy has a nice yield curve to it. It's almost like normal. I mean, they're low, the interest rates are low, but the yield curve itself is actually pretty good. It's like it's on spot. So I got to thinking about this. Bonds are going into a bubble. It's pretty obvious now that if these interest rates keep dropping the way they are, the US Treasuries are definitely going to be in bubble territory before too long. Bonds in general. And there's going to be no place to run. There's no place to save your money except for cash and gold, maybe land and Bitcoin, things that are undervalued. Because if you try and put it in the stock market, you're going to lose money. Maybe. You know, they could keep going into negative interest rates, but are they? You know, I think about like, what if you had no money right now and you started coming up with $100 a month? Where would you go to put your money? Would you honestly buy bonds right now? Speculate in the bond market? Thinking that interest rates are going to continue to go negative into the future? And you'll be able to sell those bonds for a profit? Or are you going to find something that's undervalued, like silver, at $17 an ounce, $17.22? You know, you could triple silver right now and you would still be under its all-time high. So where do you want to save your money? It's something that could possibly go down as much as the bond market can, as much as stock market can, as much as a house can? Or do you want to put it in something that's not going to go down very far, like silver? Could it go to zero? Could it be worthless? Sure, I guess it could. I mean, they could become worthless. But is that the trend that's taking place? Is silver becoming more of a commodity that's being used more every day inside of more products? With the demand becoming even more? With the supply shrinking ever more? I mean, where would you go to put your money? Cash? That's going to inflate away? So they say. Going to put it in the bank where it's going to lose interest? Or go lose capital, like your banking account's going to shrink on account of the fact that it's inside of a bank. Does that make sense? Lock you into an e-currency? How about this? Lock you into a house that if you try and pay it off early, you get punished for that. Does that sound not crazy? Anyway, I'm going to go buy me some silver tomorrow. Uneducated Economist. We'll talk to you later.